Let me know, guys, if I'm audible and if the audio is clear. I know there was a feedback loop in the beginning, but I think you should be able to hear me now. Let's look at the chat. Hello, Joe. Audio and screen share are okay. Thank you very much for the confirmation. In that case, let's check one more last time. All right, looks to be working fine. So in that case, we can now begin with our 179th trading opportunities webinar. Let me give you a very quick introduction. My name is Nirav, and I'm the admin and owner of the website 50 as Market Analysis as well as 50as.com website and YouTube channel, of course. And we are going live currently on YouTube with our 179th edition of the weekly webinar series. We go live first 3 Fridays of the week, and the last Friday is reserved for members only. And within this series, we also go live on our LinkedIn page. I'm not sure if it's broadcasting right now or not. It generally has a problem with the delays. If we delay the webinar a little bit, it generally would not broadcast. Such is the issue I have seen in LinkedIn. Anyways, so as I'm saying, this will be our 179th webinar, and generally what we do is we go over the charts of Euro USD, Crude Oil, Gold, SPX, and BTC, followed by NVIDIA. We have been covering these markets for a very long time, and as you can already see, we have captured a total of 448 live trades in the past 178 webinars. If you want to catch us live, generally we go live around 10 p.m. IST, or 1 second. Let me check one thing here. Yes. So as I was saying, we generally go live around 10 p.m. IST, or what you call 4:30 GMT. So just convert it to whichever time zone you are in. Right. So with these schedules, is there something else? Yes, we also have a video course on Elliott Wave in case you are a complete beginner and do not know how to apply these principles. If you are not a beginner and an advanced trader, you can have a look at our book Think with the Markets. It's available on Amazon's Kindle, and it is also available as a video course, Think with the Markets course. You can click here and figure out the details yourselves. Lastly, we do conduct a detailed program for people who are interested in learning the most advanced concepts in Elliott Wave. These programs are based on my 10 years of research in the field, and you can request inquiries here. Again, the requirement is that you must have completed my video course and are familiar with my work as such. And lastly, or not lastly, but we do have a track record of our past work. You can check it by visiting 50hours.com/forecast accuracy. We have an unmatched accuracy, and it's all publicly verifiable and is visible here like this in the form of sheets. What else? Yeah, lastly, we do have what you call a private Slack group where I do post my live analysis and trades as well. You can request details for becoming a member by using the contact us page and selecting the subject as requesting details. That's about it for the introduction, and we'll go over charts of Euro, Crude Oil, Gold, SPX, BTC, and NVIDIA. But do keep in mind, we did not have a public webinar last week or last to last week, because last month we had already conducted 3 public webinars, and last month had, so far it has been a straight of 2 weeks delay. So general format is we'll go over the last chart or the last discussion from our webinar. After that, look at the live chart of the market, which was seen in the last chart, and that's how we generally proceed with these webinars. So let's start off with the chart of euro, and I can see everything is working. And let me just check one last time here. So let's start off with the chart of euro, and I can see yes, everything seems to be working fine here. Just give me a 1 minute here, and I'll be back soon with you guys. Just a minute. All right, I'm back here, and let's now begin with the first chart of Euro USD. And so here we have the recording from the last discussion on the chart of Euro USD. Keep in mind, our last discussion was 2 weeks ago, so I will not take, I will not put much of a weight in these things because lot can change in just a second, and we are talking about 2 weeks. Anyways, but of course, our private group members were already aware and seeing the updates. So as we can see here, the idea looks like euro. We are looking to consider more bearish movement, and the structure we have considered here is a diagonal structure. Let's see if something else is discussed here. Alternate view, I believe. What's happening here? Let me just check. Yeah, so basically we are looking at possibilities of further bearish movement on the counter of Euro USD, and what's that? A zigzag down is, I believe, and 1.6035 is possibly the entry for the setup. Anyways, I'll just conclude it here because, as I said, this was 2 weeks ago, so a lot has already changed, I believe. This is the live chart in front of you guys for Euro, right? Let's just mark the date for the last webinar before proceeding with this chart. Last discussion was on 2 weeks ago, October 17th. The structure was expanding diagonal. Price at the time of discussion was 1.6689, and this is the live chart. 17th October, 17th. So we were somewhere over here when we were doing the discussion. So this has played out literally as discussed in the last webinar. These are the trend lines, the yellow trend lines. This is the A down, B up, C down, which was discussed in the webinar. And I'll just show it here. You can see yellow trend line, A down, B up, C down, and 1, 2, 3, 4, 5 for the diagonal structure. This is literally picture perfect. So a +1 on this counter. It has played out precisely as per analysis, and of course we were able to take multiple positions on this counter, and both positional as well as scalp positions on this particular counter. Let's have a quick look at some of the positions here which were posted in our private Slack group. Added more shorts, updated expected progression. So we have multiple entries on this. Edit shorts with the idea to add more. 21st October with wide stop. Let's see what's the entry, and we can take things further from there. Entry 1, 1.16, 098. Let's look at further entries, expected progression, etc., etc. And then we have added more shorts around 115, 78.5. And more shorts at 115, 730. Those majority positions in profits will look to add more later. 115, 652. Exit 1. That's our first exit on Euro. After that, I have added shorts yet again, and target hit booked profits on all shorts. So this is where we closed everything. 115, 37.3. Final exit, or I would say complete exit for this position. 1.15, 373. So that's how it is. 3 entries and 2 exits. So as far as this position is concerned, we'll just have a look at it on the actual chart for the sake of further clarity. Entry 1 is 1.16098. Here. That's our entry 1. Entry 2 is 1.15785. And 15,730. Almost at the same level. And let's check the exits. 15,652. Over here, let's change the color for it. Exit 1. And complete exit at 15,373. Here we have the complete exit over here. Cancel. Roughly here. So this was the entire trade. If I remove everything, we can see this is the maximum movement we have captured. I would also like to take a note of it in terms of percentage value. So we have captured a total of 0.59% roughly for the maximum movement. I mean, of course, some of our exit was before the actual last exit. So this was the complete trade, and again multiple entries and exits, and I just wanted to summarize all visually so that everybody can understand. Let me know if you guys are clear on this, and then we'll move to the actual current discussion, because we do have another trade on euro. We are currently long on it, but of course give me a little bit feedback. I've only just now started to discuss these trades visually from the Slack group. Previously these were not even touched. Yeah, all clear. All right, so I'll just take a moment and go through the chat messages. Hello Joe, thank you for the clarification. Hello Ativat. Joe and Ativat, both of them are our private Slack group members. Hello Mohammed Daniel Yunus, our regular viewer here, and Raghu, of course, one of our private Slack group members. Good evening to you. Hello Yunus, again one of our regular viewers, and all clear, all clear. All right, thank you for the confirmation, guys. In that case, let's now head over and check the actual count on this counter and see what this market might be doing as of now. So of course we are long again. This is a trade which was discussed in, or not discussed, posted in the private Slack group. We are already long on euro right now, and let's, for the sake of the record, let's have a very quick look at the actual entry level here. Check the last post. So far so good. Look to add more longs on pullback. So we are long here 115.360. So we added the longs here. Roughly speaking, this is the entry. What's the idea here? So the idea is rather simple. We were looking at a diagonal structure so far, and the point of reference would be somewhere over there. We don't want to be, we could be exact actually. I'll redraw the things. Let me just squeeze. There it is. So roughly over here is entry for the long. So far we haven't entered full position. We are in a long trade right now. The idea was that from this point of reference, which is the starting point of the analysis, basically we are looking at a diagonal structure in the downward direction. A diagonal structure will have 5 legs with the first and the fourth overlapping. So first down, second up, third down, fourth up, and fifth down will be the play. Keep in mind, this was all discussed beforehand. This hold down move was discussed beforehand and has played out as it is, which is just something we discussed a few moments ago, in case you are just watching the trading live analysis part and not the trade discussion which we did a few moments ago. I just wanted to summarize it. This is the rough diagonal structure, and as I just mentioned, a diagonal will have 5 legs in it, and the main theme is that the first and the fourth will overlap. This is the first, this is the second, this is the third, this is the fourth, and this is the fifth, right? So here it is, first and the fourth are overlapping, right? Based on this, we would now like to move the point of reference to the wave 4 high, because wave 4 will be a zigzag in a diagonal structure is our expectation, and in this case this will be the A of the zigzag, the B of the zigzag, and the C of the zigzag. And once the A down, B up, and C down is complete, we then look for bullish activity on the counter. So if this is the A complete, this is the B complete, and this is the C complete, we have the fifth wave complete. Based on this, we have added longs on this counter. The expectation is that this market will most likely or probably go above this yellow trend line. Let's draw it properly. This yellow trend line be mindful is the 2-4 trend line. So we would like the market to cross this trend line. Of course, it does not have to go straight up. It can just give a correction and then go up. And that is generally what we expect in these cases anyways. All right, so this is the entire trade setup. Stop loss in this case technically will be at the wave 5 low, which will be around 114,678. All right. Of course, we don't have to keep it that much lower. We can keep it a little bit higher, somewhere around. Of course, depending upon your own analysis, I don't want to be too precise in this. Technically, I have been precise. It will be the low of the wave 5. And that would be about that. Right. There isn't much to add here. The stop loss here is strict because we don't have a exceptionally clear confirmation of the completion of wave 5. We do have a sort of confirmation, and if we wait for the complete confirmation, then it will be too late, and the stop loss will continue to increase, right? So that's about it. And as I just mentioned, the minimum target will be the break of this yellow trend line. We are already long, and this will be the stop loss. So that's why I have kept the partial positions on only, and I would like to wait for the market to give a little bit more confirmation before I take on the full size position. I'll look to add more longs on this counter later. Let's just have a look at the comments. If you guys have any doubts or questions, just push them in the live chat right now. Otherwise, we'll move over to the chart of crude oil. I'll just spend a few moments looking into the comments and wait for a few minutes because I know the audio do sometimes have a little bit of lag. Hello, Marco, our private Slack group member. Hello, Sam. And good morning to you, Luis. Again, one of our private, what do you call, regular viewers here. All right, Raghu, Joe, Dawood, Dylan, Ativat. Hopefully, all of you are clear. Just let me know very quickly in the comment section before we move over to the next chart. Joe is clear. Also long. Marvelous. Yep. That is a marvelous trade. Euro has been exceptionally good lately. That is clear. Good. So is Ativat. Are we expecting Raghu is clear. Dawood is clear. I don't know about V or anything, but let me just tell you what we are expecting. We are expecting a zigzag kind of structure here. So my rough count will be something like this. Perhaps an A here, perhaps a B here, perhaps a C here. 5-3-5 structure. A up, B down, C up. So as you already know, guys, I don't use classical technical analysis patterns directly with their names or anything because we are using my own not my own. We are using Elliott Wave and then again my own research on top of it. So this is what I expect. Again, keep in mind it's a correction, so it can take some other form as well. But as of now, this is my expectation for holding longs. And as I have said, I am not long full position. The position size isn't that big right now. I plan to add more on possible pullbacks. Hopefully that clarifies your doubt, Raghu. And thank you, Marco, for the confirmation. All right, guys, I see no further doubts, and I can see Raghu is also clear now on his doubts. So in that case, we'll now like to move over to the next chart of crude oil. You're very welcome, Raghu. Let's first have a look at what was being discussed about the chart of CL in the last webinar. And then we will very quickly move over to the current live chart. So right now on screen, we do have the recording from our last public webinar, which was conducted on the 17th of last month. Pretty old, as I just said. I just want to check a very quick directional reference. We are just looking for looks like we are looking for bearish activity. Let me check more. Looks like we are looking for bearish activity below 57. I guess that is the whole setup. Yeah, it does look to be the setup. Let me see if there's anything else. Nothing really. And probably 58 will be the invalidation level. Probably hasn't been marked in the video. Anyways, this was a discussion long back on 17th, as you can see over here. Last public webinar. And here we do have live chart on screen. 17th. And of course, this looks to have been invalidated. And I believe we had a update to discount as well when we did the private discussion. Yes, this was updated. We don't have any trade yet on this counter, to be precise. And the reason is, let me just go over to the higher time frame. Reason is that from this point of reference, this is a corrective structure in play. Point of reference is basically the starting point of analysis. And this corrective structure could be literally multiple forms. It could be just a triangle. It could also be some sort of complex structure. And once I've said complex, that basically means that there are multiple more possible scenarios on this counter. So based on that, I have just remained clear of this particular counter to trade what do you call serious positions, at least as of now. One variation which does look to be holding so far is the possibility of a triangle continuation. So let me just discuss one possibility. Again, do keep in mind before I discuss that this is just one of the multiple outlooks. And this is far too complex for me to discuss all the variations here in public. It will take a lot of time and it will be beneficial, but the public webinars are not the kind of place to do that. Anyway, so just the one important variation that I'll discuss here is a possibility of a triangle, and a triangle will look something like this. So this is what you call the A of the triangle, the B, C, D, and E. That's how it is. So moving to the actual chart, this is a point of reference, and on the actual chart, this will be the A, B, and C, and D. So as far as the comparison is concerned, we are currently in the E leg. And the E leg could have A up, B down, and C up. It generally has a zigzag kind of structure. So at least a zigzag kind of structure. So we are expecting one leg up remaining here, because what we are seeing here is So yeah, as I was saying, hopefully I'm still audible. We are possibly inside an E wave as per this triangle count, and if it really is the case, then we'll be looking for the exact kind of play here. A up, B down, C up. That's just one of the many scenarios. Anyways, what I'm discussing is that it is quite simple enough. If we see a move above 62.736, we'll look for longs. If it straight out goes down, then it's probably doing something else. Who knows, perhaps the E is already complete here and it's just decided to go down. So we aren't really concerned about all that. What we are really concerned about is the fact that if it goes above 62.736, we'll be looking for long consideration. And this is the data feed I'm using. Keep in mind, different data feeds will have a little bit different price. Let me know if you guys are clear on this one. If not, just type in the question. If clear, then type in understood clear or something like that. And then we'll look to move to the next chart of gold. All right, Mohammed saying is clear. So is Joe and Dawood as well as Raghu. So now that everyone is clear, I can see a lot more people are online. I would appreciate a little bit more participation. But anyways, for now, we will look to move over to the chart of everyone's favorite gold. And of course, as always, let's have a very quick look at what was discussed in the last webinar. So on screen, we do have the recording from our last public webinar on the chart of gold. Do be mindful that this last public webinar was a long time back, specifically 17th of October. So you can expect that things may have changed a lot since that discussion. Anyways, let's play this video and see what was discussed on this counter. Let's take the directional bias or the main counts. So far, I don't see any clear setup mentioned, so I'll just speed up the video and check again. Okay, so in this count, we are assuming a wave 4 in continuation with invalidation below 4189. All right, so basically we're expecting sideways movement. Invalidation is 4189 and basic bias was up. Let's pause this video, and obviously there may be some other points, and I have tried multiple times to check. You can check the other points later on at your own, in your own time. I mean, we don't want to waste any more time on this 2 weeks plus old or almost 2 weeks old discussion. Thank you for the confirmation there, Ati. But anyways, let's look at now. There it is, 17th of October, I mean. Of course, we have the invalidation here. 4189 has been breached. And the market did try to test the patience. It went above and almost, not almost, precisely went to the last high, near to the last high, and tested it before turning down. So basically, a lot has changed since our last discussion. And I just want to see or show you the actual count. Of course, we have discussed major chunk of it in the the private webinar which we conducted last month, last Friday of the last month. And without wasting too much time, I just would like to come to the actual crux of all this. The main understanding is that from this point of reference, price level around 4378 on this data feed, we are seeing a downward correction. Downward correction, specifically, we are looking at a possible WXY correction or double zigzag correction, also called a complex correction. And in this complex correction, we have the wave W already complete here. We have possible continuation for X, which will possibly lead down to the Y if this whole count is correct. A rough structure, something similar to that, what I have drawn on screen, maybe. If you want to see the rough skeleton of how it looks, let's call this as the W. Let's call this sideways movement as the X. And this will be the Y. So we have this A leg down, B leg up, and C leg down for W. Complete. For the X, we have the sideways movement, maybe complete, maybe continuing, because keep in mind sideways movements are represented with the, or not represented with, I represent them with the rough box. Of course, the box isn't always going to be precisely a box. The market can go up a little bit and test the ranges on both sides. But nevertheless, this sideways range, W down, X up, and Y down is what we are expecting on this counter. Currently, W down is complete, X is possibly continuing, and Y down is what we expect will come to pass if this count is correct. Based on that, what I have done or what I'll look to do, not done, is look for short trades on this counter. And specifically, what we would like to do is technically you can go short below 3, 8, and 9, 4 something. Somewhere over here. Technically, we can go short below this level. 3897 actually. Let's just type it down here. All right. Yes, so as I was saying, we are expecting bearish movement below 3897. Nothing too fancy about it. Simple analysis. And as far as bullish movement is concerned, we aren't really keen on bullish movement unless we see something very clear. Let's say a clearish, what do you call, taking out of 4123, perhaps would be clear enough. So I'm not saying we have a confirmation or a trade setup here for the bullish movement. We'll just look to consider longs above this particular level. All right, so this is the whole setup. Let me know, guys, if you have any doubts or questions. Guys and girls, ladies and gentlemen, this is the analysis of gold. Pretty simple. We are expecting further bearish movement to continue as a WXY correction. Upside 4123 level is what we will look to consider longs above, right? There is no confirmation that there will be longs. It's just that we will consider longs above it. Potential downside targets for wave Y, I think. Yes, these are the potential downside targets: 3846 to 3720. So these are the potential downside targets for the market if the wave Y is continuing as per discussion or as per analysis. So if there are no further questions, just type in understood or clear and we'll then move over to the next chart. Hopefully you are clear with your doubt, Raghu, now. And thank you, Mohammed, for the confirmation. Same goes for you, Dawood and Bharti. And Joe is also here and he's saying clear. That's good. In that case, we can now move over to the next chart of S&P's 500. What's Marco asking? Let me just quickly look at that before we move to the next chart. Marco's asking X with 3 legs is correction. Okay, so internals of X. I posted it in the private Slack group, Marco. Anyways, I'll just discuss it very quickly here. I generally do not like to discuss complex structures too much in the public webinars. We are expecting this as an A up. This can, by the way, be counted in multiple ways. You can say B is complete here or maybe not. But in anyways, if it's complete here, then we can see a C up like this before the leg down. Or you can also say that the B is not complete here, but in fact is continuing. One second. So yes, removing everything. So in case the B is continuing, we'll consider it to be continuing perhaps till here. All right. And then there will be a C up before the leg goes down. So yes, roughly speaking, I think some more upside is remaining, and that is like a small upside is remaining before the market goes down, and that is something we have already discussed in the private Slack group, right? Nevertheless, that is the reason I am more focused towards the taking out of the 3931 level, and actually not even 3931, above like 39506 or something. Once the market takes that out to the downside, we will then think of taking bearish trades. I hope that clears your doubt, Marco. And I will now like to move on to the next chart of S&P. Just let me know, Marco, if you have any more doubt on this. So now we do have the live chart of S&P's 500 in front of us. This was a discussion done in our last public webinar, which was quite a while back on 17th of October or 17th of last month. So let's see what was being discussed. We were discussing a possible correction on S&P. I am suggesting the possibility of A down, B up, which will be followed by a C down as per this count. And the trigger was 6577 to the downside. Let's note it. Invalidation and bullish movements are to be considered only above 6723. So these are the main biases. Of course, many more detailed things have been discussed in the actual discussion, and we don't have the time for all that. So I'll just very quickly move through this and see if there is something else we need to discuss. Not really. That's about it for the discussion from last webinar. Let's now head over and see the live chart, which is now on screen in front of you. Last webinar was public webinar was on 17th of October. The webinar was conducted when the time was somewhere over here. Since then, the market has proceeded to go up. It crossed the invalidation level for bearish count by moving above 6723. Once it went above 6723, it literally after that just continued going higher. Now we did have a bullish setup in the last webinar, but I'm not so sure how detailed I had discussed it. As such, you can see the bearish trade setup of the market going below 6577 was never activated because the market did never go below 6577 after this discussion in the last public webinar on 17th of October. However, the bullish invalidation lever was triggered, which triggered a bullish sentiment on this counter. Then again, as I'm saying, I'm not sure how much of that I have discussed in the last what do you call public webinar on or not. Please do refer to it yourselves. But we had this lengthy discussion in our private Slack group as well as the private webinar which was connected on the last Friday. Let's see what else we do have on this counter, or not. What else do we have? What is the exact expectation from a counts perspective on this particular counter? Oh, of course, it has invalidated that count. And that is rather bearish. And yes, of course, before we discuss all that, I'll just like to quickly have a look at the trades we have pulled on S&P's 500. So this was a short setup or short trade which was carried out live. 6743.79 is roughly the entry. After that, let's see. This is how we closed the trade at around 6726. So this was a quick trade, I think, compared to the other trades of the week. I mean, let's discuss it visually, and of course, it was closed today and the shorts were added yesterday. So let's have a very quick look at it visually. 6743.79. Somewhere here. That must be here. One second, one second. So this is the small movement which was captured in the short trade, right? Roughly 17 points. Anyways, I just wanted to have a very quick look at the last webinar's discussion before we moved on to the live trade. And of course, I also wanted to have a quick look at the actual action we have been able to see on this counter. So I'm now on a high time frame discussing the bigger picture view, which is suggesting some rather bearish things, right? I'll just consider both possibilities. First, I'll discuss the bearish possibility, and then we'll look to consider if there is some bullish outlook to all this as well. So first of all, here just focus on this red trend line. I'll just draw it in white here. So the market has already breached this. So okay, anyways, this is the trend line which I'm talking about, and this is where the market has breached it, not as expected. If it was just a simple correction, it would not have been going this much deeper. But this is a high time frame correction, and in this particular instance, we have the 1 here, the 2 here. One second, not this one. So in an impulse, Elliott Wave impulse specifically, we will have 5 waves. The first leg will be here, second leg will be here, so on and so forth. And if we compare it with the actual chart, 1 here, 2 here, 3 here, 4 here, and 5 here. Once the fifth leg is complete, we expect the market will turn down or move lower. This correction could be wide, right? It could go much lower. It could go a little bit lower. So in this particular case, this correction has already started because we expect that this wave 5 is already complete, which means this market can go much more lower as well. Second possibility is that this break here that you see below the trend line, it's just a false break. And yeah, that is a possibility that this break is a false break. We don't have any confirmation for it. We will like to think of it that it's a false break, maybe above 6797. Right now, we don't have any evidence to say it is or it is not. So this is the invalidation of the bearish view 6797 plus. All right. So on this counter of S&P, this is our view. We are considering that much more bearishness can be seen as long as the market sustains below this marked trend line. The trend line is in CN color and is representing that the whole impulse is complete, and break below this trend line can lead to much strong down moves, or not much strong, very strong down moves on this counter of S&P's 500. Let's now have a look at what possible targets may we expect on this counter. So these are the marked targets. All right, so these are the marked targets, pricing around 6494, 6325. There it is. This is what we expect if the market continues lower. Of course, I'm not saying all these levels. Perhaps it may even go lower, who knows. But at least 6494 is what our immediate target is if this continuation continues, of course. If not, as I just mentioned, move above the trend line, this red trend line, and you can just check back in the chart which trend line is it and how to draw it. And move above it will be the idea that perhaps it's not going lower any further and it has much more upside remaining. With that, I would say we have discussed the complete chart of S&P 500. Let me know if you guys understood it. If it's clear, just type in understood or clear. If not, you can push in your queries. And of course, I would like to request at this point to all our regular viewers to kindly, very kindly share this webinar with your friends and colleagues via WhatsApp, email, word of mouth, Telegram, or whatever you guys are using these days. Because we definitely need to see more participation in these webinars, even after so many requests. We are still not seeing consistent 1,000 plus views, and as a matter of fact, forget about 1,000, even some videos don't have 500 plus views, which is not good considering how much effort goes into all this research analysis. I would again very politely request you guys to kindly do your part and share the word. So with that being said, I think we are done with this chart of S&P's 500. And let's just take the comments for a second. How did you arrive at support levels in blue parallel lines? Well, to be honest, there isn't really much to say about this. One second. You can simply see, one second. You can see this box. This is the corrective structure, and this box is literally above and below these trend lines. And then this is 38.26038. So this is the way to do it. At least right here, changes from situation to situation. So Joe says understood, so says Bharti. And that with that, I hope everyone else is also clear. And of course, Raghu, if you still have any doubts, just push them in the live chat. All right. Thank you, Dawood. With that being said, let's now head over to chart of BTC. Again, not sure what was the count in this almost forgotten 2 weeks ago's public webinar. Let's go to BTC. Thank you, Raghu, for the clarification. Here is the discussion from last webinar on BTC. Last public discussion, I mean. So we are basically expecting further bearish movement on this counter of BTC. Targets are 100849 followed by 86220. So with that, let's now head over to the live chart. And of course, the count is bearish. We are expecting more downside on this counter. Here it's the chart of Bitcoin. Let me just check one more thing real quick. We are expecting bearish movement below 100849. So as you can see, the Bitcoin market has just gone down as per the analysis. Although, one second, as I was expecting, that something isn't right. 16th. Yep, it is. So here we discussed it, and then it has gone a little bit lower. Let me remove this banner. All right, that's it from the last webinar. We were expecting more bearish movement. The market has gone down. So that's it from the last webinar on BTC. Let's now head over and see what this current analysis is pointing at. So currently we are expecting that this market is in a flat kind of correction. Let's take it from this point of reference where we were able to pinpoint the reversal. It literally was a pinpoint of the reversal. Let's see how. Around 126139. So as I was saying, below this level of 126139, we are expecting the market will go lower. But why is it showing 106 here? It basically means this target one was already hit. Anyways, let's not waste any more time here and just check the actual thing. So here is the live chart. This is a point of reference over here. Price level of 126.082. Although it didn't quite, actually it did happen straight down, but yeah, it actually happened straight down. So now let's see what structure we are in right now. Right now it does look like we are in a very nice looking zigzag kind of structure here. This will be the rough structure of zigzag with this as the first, or A like down, B up, and C down. Here what you can say is that the A leg down is finished, B leg up is again finished, and C leg down is continuing. It could also be the case that the market has decided to remain sideways in this box range for a little bit. It will just go up and then down. So these are the two possibilities. One is up and then down. Second possibility is straight down. We can use a different color for it. So BTC is basically a bearish counter as of now, and one second, and playing on it from a swing perspective would be better in my understanding here. And of course, the minimum downside target will be somewhere around 98,663. Even for the lower targets, I haven't really checked. Just let me know, guys, if you have any doubts or questions on this counter before we move to the last chart of NVIDIA. If not, just type in understood or clear, because all the major points have been discussed. And of course, do not forget to type in understood or clear if you are clear. All right, Mohammed, Joe, Dawood. Again, it's taking a little bit of time to load the comments. Thank you for the confirmation, Dawood, as well. All right, thank you for the confirmation, Raghu. And Mohammed has pushed a question here. Do you trade stocks like Nike and Currently, I'm not trading stocks, but as you already may be aware, Mohammed, we are covering NVIDIA quite specifically, although I do dabble in stocks from time to time. Right now, I'm mostly what you call focused on the major pairs. So yes, I do have on-hands experience of multiple stock markets, Indian, US, Russian, etc., etc., including stocks, indices, and all the other things. But I do not generally prefer the stock over the index. Generally, I mean not always. Marco says he's clear. All right. Hopefully that answers your question there, Mohammed. And it's good to know that Marco is clear on the analysis. Let's, without any further ado, hold NVIDIA. There it is. Let's hold here. So here we are looking at the discussion from last webinar on the counter of NVIDIA before we move over to the actual live chart. And let's see what was being said on this counter. We are expecting more bearishness on NVIDIA. We are expecting A leg down, B up, and C down. So basically, below what is this 178, more downside is to be seen is the expectation on this counter. And now we do have the live chart. There it is, our expected structure. Of course, it doesn't always happen precisely to be visible as a bookish example. In this case, it has seemingly done that, although I'm not convinced much with it and would like to see the updated view here myself. This was the part which we were discussing just before. A down, B up, C down. It just didn't go that much lower as expected for the C leg. Just A down, B up, C down, but not much lower. Anyways, how has this count evolved? Let's check. So right now what I can see here is that we were expecting a nested impulse in play. That is an impulse wave which has multiple inside legs which are again impulse, and those have inside legs which are again impulse in the upward direction. So this would have been something like this: a 1 up, a 2 down, a 3 up, a 4 down, and a 5th up. Here what we have is 1 will again have 5 legs inside of it. 2 will be a corrective structure. 3 will again have 5 waves inside of it. This is what you call the fractal nature of Elliott wave. So now you can look at it over here. This is the dot dot 1 of some higher degree structure, or let's say dot dot 1 of dot 1, dot dot 2 of dot 2, and then again dot dot 3 is having 5 waves inside of it. You can see here dot dot 3 is continuing with the first of the dot dot 3, second of the dot dot 3, fourth and third of the dot dot 3. So this is the fractal nature of Elliott wave. But as I said, I'm not very happy with this count. The reason is quite simple. It just seems to have a little bit more force or bias towards the downward movement. I mean, if you look at all this structure, this is comparatively bigger and it's much cleaner. suggesting more bearishness may be seen, and this nested impulse may not be what this market is following. So on this counter, the idea is to stay out of this market for now and wait and watch until we see more clarity. I can hypothesize some scenarios and they probably will even work out. But as I just said, it's not a market for everyday trader and would require a little bit more expertise than normal. So on NVIDIA, it's just a wait and watch, and we would like to see it sustain above. As I'm saying, we would like to see the price sustain above this level of 176, not greater less than. All right, so NVIDIA wait and watch price should sustain above 176.77, let's say. And the market, if it goes higher than what do you call 205, then we will look for longs consideration on this counter, 205 plus. Let me know, guys, if you have any doubts or questions on this counter. If not, just type in understood or clear, and we will then be able to say that we have completed this webinar, or what do you call, all the main charts have been discussed. And of course, guys, before you type in your responses and what do you call views on the discussion so far, if you have enjoyed it, again, request that you kindly do share the content with your friends and colleagues using word of mouth, WhatsApp, social media, emails, Twitter, whatever you are using, right? Because it really means a lot, and we are definitely not where this webinar should be. So we would request that you kindly do help us out in taking it where we really want it to be, so that we can have more people and then more content to discuss. That will be really, really awesome, won't it? Let's just have a quick look at the comment section. Mohammed is saying, yes, thank you. You're very welcome, Mohammed. It's good to know, Joe. You too, Marco, have a really great weekend. Same to you, Raghu. Have a nice weekend. And Joe is saying, thank you, Nirav, for the remarkable answers. Can't wait to see how the euro trade will evolve next week. Yes, yes, Joe. Same here. So, everybody, have a wonderful weekend, and thank you for staying till the end, those who did. And of course, thank you to all of those who are sharing my content regularly and allowing me to reach more views. Hopefully, you continue to do that. And of course, more people are gonna join in and help me grow the channel. And that's about it, guys. And thank you. So you're welcome, Mohammed. That's about it, guys. Thank you for staying till the end. And hopefully, you enjoyed the content and will join me in the upcoming webinar as well. And of course, enjoy the weekend. You're very welcome, Dawood. I'll see you guys in the next one. Take care and bye for now.